President Trump taking questions from reporters in the cabinet room following an event with the state leadership from North Dakota and Colorado. He was answering a question about an answer that his top infectious disease expert, Dr. Fauci, gave in testimony yesterday, where he said that states that reopen too quickly would face serious consequences. President Trump said that he thinks that comment was not acceptable from Dr. Fauci. He was also asked about companies that take loans intended for small businesses. He said if these big companies received loans and they don't give them back by a Thursday deadline, then Trump personally will go after them. He also says that he believes that Fed Chair Jay Powell is doing a better job, that his performance has improved with Powell, but said that they are still apart on one key issue, and that is on interest rates. President Trump still believes, he says, that the U.S. should have negative interest rates and that he hopes the Fed chair will come around on that. Now, Melissa, this is a position that the president has been touting long before the coronavirus crisis. When I spoke to White House officials at that time earlier this year when the president was touting negative interest rates, at that time they called it brinksmanship, but it's unclear with how much the world has changed in that time whether he truly thinks the U.S. should have negative interest rates now. Melissa?
All right, Kayla, thank you. Kayla Tausche in Washington. Earlier today, Fed Chair Jerome Powell actually addressed those growing calls for the Fed to entertain the idea of negative rates. Powell saying the Fed has no plans to resort to negative rates for now. So that got us thinking, in a world of negative rates, how do you trade this market? Let's bring in Chris Harvey, the head of equity strategy at Wells Fargo Securities. Chris, great to have you with us.
Great to be back.
I think this is the big question for people out there. So just before we get into individual sectors and things like that in a negative rate world, what's sort of the macro view of what that world looks like if we had to go to negative rates?
Right. So if you think about it, if we have negative rates, what kind of environment would that look like? You have to believe that something has gone awry, right? The economy has fallen out of bed, couldn't get out of its own way, or in some sort of economic malaise. And that's a very difficult environment to be in, and that's a very difficult environment for risk and risk product. So we're not big fans of a negative rate environment, and we don't think it would be great for equities and many other risk products.
Are you not fans of negative rates because you don't like negative rates and the impact negative rates will have, or because negative rates, if they are adopted, means that they are adopted because the backdrop is so bad?
So I think it's a little bit of both, but it's more the latter, right? So negative rates, again, what you have to believe is something has gone awry, and that environment's going to be very difficult to get there. Furthermore, what we've seen from Europe is negative rates is not a panacea. It's not a great situation. It hasn't helped out the Europeans. So I'm not really sure what bringing rates negative would really do, and it's problematic for large parts of the economies. It's problematic for large parts of the capital markets as well, financials or otherwise.
Okay. Well, let's drill down there. In that negative interest rate world, Chris, what would market leadership look like?
So I think market leadership, again, if we think about the big picture, you're going to have, in all likelihood, a lack of growth. So a scarcity of growth, that's going to drive people to your high growers, your steady earners. That's going to be your uber cap tech companies. That's going to be your large cap growth companies. Will be in an environment where there'll be a Nifty 50 type environment, maybe even a Nifty 5. In addition to that, people will probably want some certainty. They'll want those steady earners. You can find that in your utility and your utility stocks. Obviously not as high growth, but if you're going to bring rates to zero or negative, you can justify a pretty high multiple. So Uber caps as well as utilities.
And then last question here, and I'm sure the traders will have some too. Market losers, you mentioned banks. Banks are already trading horribly. They're trading as if negative rates is a foregone conclusion, Chris. It's going to get worse even in a negative rate environment when that actually happens?
So in a negative rate environment, what I think would occur is you would put more pressure on net interest margins. They would be squeezed one more time. Furthermore, if you're in an economic malaise, credit is going to be more difficult, so they'll have to post more reserves. Lastly, one of the reasons why you want to own these companies and why I think they've been trading a little bit heavy as of late is that capital give-back story. Your payout ratios will come down. So overall, it's a bad environment for multiples, for bank multiples. It's a bad environment for EPS or EPS growth for banks. I don't think it's a solvency issue. It's just a matter of this is not an environment where banks can really operate quite well.
Okay. Chris, it's always great speaking with you. Got to let you go. Chris Harvey, Karen Finerman, where do you stand on a negative interest rate playbook and what that world would be like?
Well, I'm not quite sure what it would be like. I mean, Chris brings up a good point. We've seen the experiment in action in Europe, and it really hasn't worked, or it hasn't had the intended effect to really start their economy on a big growth cycle. So I hope we don't get there. Clearly, it isn't good for banks. The money center banks do have the benefit of having only half their income from net interest margin, but still, it'll weigh on them. And I think, you know, in that environment also we have, even though rates are zero or negative, and you could even argue for a super high multiple, I don't think we'll get that on the market at large. So I think it'll be bad for banks. I mean, I wouldn't do this, but if you really believe negative rates, you want to be long bonds. I'm more afraid of bonds going the other way.
Dan, if memory serves me right, you had said it on one of the shows in the past couple of weeks that if we went to negative interest rates, you'd sell everything and quit. That's how strongly you feel?
No, I said that if the Fed starts buying equities, I don't really care what they do on the interest rate front. They've already made that decision because you can just look at where Fed fund futures are looking out. Here's the thing, Mel. Just look at the SX70. I said this on Monday night. This is the Euro Stock Bank Index. It's down 90% from its all-time highs. It's 2% from its all-time lows. They're telling you how this trades. The Topix Bank Index in Japan, down 92% from its all-time highs. This is why our banks are going down right now. They are pricing this in. So all of our banks are going lower. The longer that the president keeps pushing Powell and pushing this narrative, it's just like a weight on the banks' necks here in the U.S. So to me, Guy says this all the time about Trump. Be careful what he wishes for, because when it happens, lower oil, interest rates, they crash. And the circumstances economically have not been pretty good so far.
All right, we got some breaking news here on a cancer drug trial. Meg Terrell's got the details. Meg.
Hey, Melissa, this is an update on Allogene's cancer drug. This included in the big data drop ahead of the ASCO Cancer Research Conference that takes place in Chicago every June. Well, it's going to be taking place virtually this year, and all of that data coming out tonight. Allogene's stock now up almost 15%. This is a drug known as CAR-T, which is that personalized cancer immune cell therapy, where in other forms, you're actually taking somebody's own T cells out of their body, genetically modifying them to fight cancer and giving them back. Well, this is an off-the-shelf version of that therapy, a new approach where you don't have to take the person's own T cells. And so it's early days for this treatment, but they are showing some positive early results in clinical trials in a form of lymphoma. And so you are seeing that drive the stock up now almost 20%, Mel. And we do expect to get to see more data at the ASCO virtual conference in just about 2 weeks. Sending it back to you.
All right, Meg, thank you. Meg Terrell. Wow, it's now up 20% in the after-hour session. Guy Adami, research goes on in other parts of the drug industry.
And it speaks to what we've been talking about now for a while. I mean, one of the things we have gotten corrected, the move in big cap pharma and these biotech stocks. I think yesterday we talked about the IBB making this new high. You go back, what Meg was just talking about, go back and look what happened to Kite, go back and look what happened to Juno, all in that same space. I mean, the biotech names, regardless of what you think about their profiting, their prices, the stocks make a lot of sense. I think more so now in this environment. But again, that's something we've been saying now for months.
Tim, quick.
And balance sheets in biotech, especially at the top of the weightings of the sector, are very strong. And again, right, I mean, look at the outperformance. Anyone attaching to CAR-T, whether it was Gilead when they made those acquisitions, that's the space to be in, and certainly where you're getting the multiple.
All right, Allogene up 21% now after hours.